Hi folks, I'm Chris Mathis, Chief Currency Strategist here at Bank Pips Global, and we're going to go ahead and revisit the Euro US dollar here. We did a post on this a few weeks back, and we're still bearish, but we weren't expecting this to rise this far at that time. Now it's fine because we didn't enter a trade, we didn't get a trade set up. What we typically do is we highlight an area where we're expecting the market to turn, then we want to see certain things happen in order to enter into that trade. The reason we picked between 15 and 1600 at that point in time was because we had the 50% Fibonacci retracement of this decline, and we're looking at this as potentially a flat corrective cycle or an expanded flat correction. Now, for those of you who are familiar with Elliott wave, you'll understand what I'm saying. If you're not, I'll just throw some labels on here, and just a basic explanation is an Elliott wave cycle is typically 5 waves down, then we'll have some kind of a 3-wave cycle back. That's what the flat is, the 3-wave cycle back. So in this case, we have a 1-wave down, we have a 3-wave cycle back in 2, here's our 3rd, this all is our 4th right here, and then we have a diagonal 5th that came in, which ended here. Now for those of you familiar with flats, and don't worry about the degrees, just showing the numbers, I'm not worried about the degrees right now, just so you understand what I'm looking at. Then we have an A correction here, a B wave, and this is our C wave of our flat. It's a deep flat, which is why initially we were looking at between 1500 and 16. But when we look at this, we see the 4th wave is here. Okay, this is an extended 5th, an extended kind of or we won't call it extended, it's a long ending diagonal, which means that the end of this cycle occurs in the area of the previous 4th wave, which is all the way up here. And there's nothing in the rules that says a flat can't go this high. That we just don't typically see it happen as much. It's rare. So anyway, with this in mind, there's other things that we're also looking at. Now, this is a fairly key area as far as resistance is concerned. There's a good amount of liquidity sitting up here. And when we go ahead and we look at the positioning data, the positioning on the euro long is very extreme. We're already seeing the small speculators start to bow out a little bit. And what happened this week was we didn't see continued buying. Okay, we didn't see continued buying in the euro. We actually saw a lot of closing of short positions, which pushed up the net long. Okay, this is why it's important when you're looking at positioning data, if you're looking at COT, to look at the details. Okay, don't just look at the lines, look at the details so you actually understand what's happening behind the scenes. Because if you're looking at that data and you're saying the net long increased by the large speculators and think there's more buying, that might not be the case, and that's a big difference. Okay, so let's go ahead and look at that now. It's our COT data here. If you're just looking at the euro, and this is just the legacy report, if you're looking at the euro, we just see this jump higher, right? So we see net longs increased. We already know we're at all-time levels. We're at all-time levels for the large speculators, all-time shorts for the commercials. And just this week, we saw the small speculators start to bow out of the longs. These were at all-time levels as well on the previous report. So if you look at this, you might just assume, okay, folks are still buying the euro. What we want to do is we want to actually go into the data whenever we see this, and we want to look at what's actually happening here. If we look at this, we see large speculator shorts closing out. Okay, 15,134 contracts closed, which pushed that net long position up. There was only a small amount of buying comparatively. Okay, just under 4,000 contracts. Now there's still some buying in here, but the majority of that move was shorts closing out. And these are folks getting squeezed. These are folks that have gotten short the euro and they're getting squeezed out at this point. This is exactly what we want to see, folks. This is exactly what you'll start to see before a turn. You have some folks getting in late, and you have all of those shorts starting to close out, getting squeezed out. All right, here we are back to the euro. One more thing I do want to look at here, and we're going to jump over and look at yield. This is the yield spread, euro US dollar right here. Is the 2-year. And you can see as we're this entire rise, from this point, the entire rise, yield stopped moving with the euro pretty much here, pretty much on this little swing high. We pulled back, and this entire run, yields have been just moving flat sideways. Okay, so we have yields moving flat sideways as far as the yield spread, the euro US dollar. Then we have positioning extreme, really at extreme levels right now. We're already seeing the small speculators start to bow out. We're seeing a bunch of closing of short positions that got squeezed out on this run. And we're sitting at significant levels of liquidity here. Okay, on a higher degree time frame, on a weekly time frame. What we're looking for now is we want to go down to the small degree time frames, and we're going to watch. We're going to wait for this cycle. Maybe this is some kind of, it can't really be a triangle. Whatever this cycle turns out to be, it could potentially be a triangle still. Whatever it turns out to be, what we want to see is another rise here, okay, if that's what's going to happen, and then the rejection. Or we want to see the rejection at this point. Okay, because we do have a little divergence over the top here. This is something we like to see. We have a momentum divergence, but we haven't seen the move down below any breaking points here yet. Okay, once that occurs, then we can start to get short. That's our entry signal to look to start to get short. Now, obviously, if we're euro bears, we're also dollar bulls. We do see some significant problems in the equities markets, and those of you who have seen the other videos or reading the post on the site, you see our reasoning for expecting weakness to come in equities. Now, it doesn't mean it's going to come from right this moment, but we do think we're going to shift into a risk-off environment. We see a potential deflationary environment coming into the picture here, all of which should be negative for the euro. Now, the other thing that we were looking at is when we come over here and we look at the commodities markets as well. I'm going to take this back to the weekly, and we will look at, I'm going to start with Dr. Copper over here. And copper is rising into a significant resistance level here. It's a significant resistance level. We've had a nice run up. We got rejected the first time. We really failed to really dig into this level, and we're just pulling back what looks to be correctively at this point. I'll take that down to the daily, and you see this little, looks like a corrective setback. There is potential for a leading diagonal here, but that's an alternate, so we would expect this market to pull up one more time and test this area and very likely reject. Should create a divergence, reject it. When we go over and we look at what's going on with oil, and this is Brent, look at the diagonal. See the diagonal movement here? This is an ending cycle. See the divergence? This is what we see in an ending cycle. We wait for this to start to break down. We see the same thing in WTI. Okay, WTI has came all the way up and right back to this resistance, moving diagonally. See if we have a nice little fib in here, 62%. So, but the most important part is we're coming off of a strong resistance level here on the higher degree time frame. We have a diagonal movement. We're diverging. This is the signs of a weakening ending cycle. All right, so when this breaks down, and we're seeing this in copper, we're seeing it in WTI, we're seeing it in Brent, we're also seeing it in the Thomson Reuters Core Commodity Index. Okay, so the commodity index itself is showing a very corrective looking setback. Okay, so we have multiple reasons. We see it across multiple markets from an intermarket perspective. We look at commodities. We have reasons in equities and overall risk. We see positioning is very extreme at this point, and we're starting to see it fade a little bit, especially with the closeout of a lot of those short positions. It's something we like to see at the end of a cycle. Small speculators already starting to bail a little bit, so we should be getting really close to the end of this cycle, and we're just waiting for the very specific price moves to give us a bit of a confirmation, because we're looking at this as a swing opportunity. All right, thanks for watching, folks. See you next time. Take care. Cheers.